Hello and welcome to BCR. Let's get your trading day started with the following financial news and market headlines.
The U.S. dollar index saw a modest rise to 104.50 on Thursday, as sellers appeared to be consolidating the significant downward trend from Wednesday's trading session. Signs of adjustment in the U.S. economy were evident, as evidenced by an unexpected rise in initial jobless claims and a contraction in the Philadelphia Fed manufacturing survey. The lower-than-expected inflation data released on Wednesday supported the view that the Federal Reserve might consider cutting rates sooner than anticipated. Throughout the latter part of the week, the dollar index traded just above 104.00, as signs of slowing inflation in April and mounting pressures on the U.S. economy emerged. On Thursday during the North American session, gold prices fell below $2,390 as a rebound in U.S. Treasury yields supported the dollar. The inflation report from the U.S. on Wednesday had initially driven gold prices higher, but mixed economic data on Thursday may trigger some profit-taking ahead of the weekend. Gold was trading at $2,381, down 0.24%. High trading prices on Wall Street, continuing to hover near or at record highs, have weakened interest in safe haven assets like gold. Despite expectations being exceeded in the latest U.S. jobless claims data, which lagged behind prior figures, the U.S. economic data continues to push gold prices higher. Midweek, U.S. WTI crude oil briefly dropped to an 8-week low of $76.35 per barrel before recovering to $78.50. Following the release of the U.S. CPI, which indicated a decline in inflation, expectations for a Fed rate cut were heightened. The anticipation of a rate cut by the Fed led to a broad increase in risk appetite, which supported a rise in oil prices. According to data from the U.S. EIA, the decrease in crude oil inventories this week was faster than expected. For the week ending May 10, the EIA reported a decrease of 2.508 million barrels, exceeding the anticipated decline of 1.35 million barrels and further reducing from the previous week's decline of 1.362 million barrels.
We hope you enjoyed today's market outlook. If you have any questions or topics you'd like us to cover, feel free to leave a comment. Remember to join us tomorrow morning for the freshest news